Okay, let's unpack this. You're putting in the effort, working hard, but maybe, just maybe, the financial results, well, they don't quite match the output.
And that feeling of running hard but staying in the same place.
Exactly. If that feels familiar, you're definitely in the right place.
Yeah.
We've just done a deep dive into some really fascinating source material, an article that kind of challenges a big assumption,
Yeah, it argues that building wealth might be less about the actual size of your paycheck.
which is what most people focus on.
Right. And much more about your internal perspective, how you think about and interact with money.
So our mission here for this deep dive is basically to pull out the key insights from this source.
The practical strategies, the surprising examples.
Yeah, give you a shortcut, really, to understanding what seems to truly matter in this whole journey of building wealth.
And the core idea, the foundation from this source, it's pretty powerful. It starts with mindset.
Financial success begins with the right mindset. That's the headline.
It really is. The source emphasizes it's not just about how much you earn. Everyone gets hung up on that. But it's more about how you think about money, how you handle it, your habits around it.
So if you feel like you're on that financial treadmill,
Yeah.
the suggestion is look inwards first, not necessarily outwards for a raise or something.
That's what the source implies. A shift in perspective might be needed if you're working super hard but not seeing the wealth accumulate.
Yeah.
Step one is that internal financial world.
Okay, so not just changing what you do, but how you relate to a whole concept of money.
Precisely. And the article does get very practical with strategies that are rooted in this very mindset idea.
Like what? What kind of practical things?
Well, one technique that really stands out is this idea of essentially tricking yourself into saving.
Tricking yourself. How does that work?
It sounds funny, but it's about using simple, powerful behavioral nudges. Like automate your savings. Have the money move before you even see it or think about spending it.
Okay, pay yourself first automatically.
Exactly. And then the second part is making that saved money just a little bit harder to get to.
Oh, like putting it in a separate account, maybe even at a different bank, so it's not just a quick transfer away.
That's the idea. Create a bit of friction. If it's not instantly available in your everyday account, you're just, well, less likely to dip into it impulsively.
Right. And the article suggests these small automated tricks, they add up.
Significantly over time. And almost without feeling like you're depriving yourself because it's automated, it's slightly out of sight. It leverages psychology, not just willpower.
I like that. Less reliance on constant discipline.
And it applies a similar kind of low-effort philosophy to investing. The source talks about something called the 100% Lazy Investor's Guide.
Lazy. That sounds
Hello.
not good for investing. Or does it mean something else here?
Yeah. The name is provocative. But lazy here means smart automation. Setting up a portfolio, maybe index funds or something similar, that requires very little ongoing maintenance. You set it up carefully.
And then let it run, basically.
Pretty much. The source presents this low-maintenance approach as, perhaps surprisingly, quite effective, often outperforming strategies where people are constantly tweaking and trading.
Because they're not making emotional decisions or trying to time the market.
Exactly. It frees up your time, your mental energy. The cleverness is in the initial setup, the system, not in constant daily activity.
Okay, that makes a lot of sense. Moving from frantic activity to strategic automated systems. But the article doesn't stop at saving and investing, does it? It looks at other paths too.
Yeah, it definitely explores broader ways people build wealth. It throws out some interesting, maybe even challenging ideas.
Such as?
Well, one is the challenge of starting a profitable business with, get this, less than $1,000.
Whoa. Okay, less than $1,000. In, today's economy, that sounds almost impossible. What kind of business are we talking about?
It does sound incredibly lean, doesn't it? But the source argues it is possible. You need the right, very focused idea and a super lean plan.
So maybe service-based?
Yeah.
Or something online?
Probably. Things with low overhead. The point isn't that it's easy, but that it challenges the common excuse. I don't have enough startup capital. It suggests low-cost ventures can be profitable.
Okay, that definitely flips the script on traditional entrepreneurship requiring huge investment. And then it goes somewhere completely different, right? Investing in overseas property.
Yeah, a total pivot in scale and complexity. The source includes this as another potential path maybe for higher returns.
So it's sense of but?
Oh, absolutely. A big but. It's very careful to highlight the significant risks.
Like what?
Things like navigating unfamiliar legal systems, potential political instability in different countries, currency fluctuations, all that stuff.
So definitely not painted as a simple option. High potential upside, maybe, but matched with really complex risks you have to understand deeply.
For sure. It underscores that different paths require vastly different levels of, well, risk tolerance and homework. Due diligence is key there.
Makes sense. And the source uses some stories to make these points stick, right? Anecdotes.
It does. And some of these are really memorable. There's a section that touches on the ideas from Peter Lynch's book, One Up on Wall Street.
Ah, the investing legend.
Yeah.
What's the core idea there?
His famous point that regular people, everyday investors, aren't necessarily at a disadvantage compared to Wall Street pros. In fact, they might have an edge.
An edge.
Because you're closer to the ground, you see trends emerging in your own life, in your community, often way before they hit the financial reports.
Like noticing everyone is suddenly carrying a certain phone or
Sure.
lining up at a new coffee place.
Exactly. The source uses Apple as a classic example. Regular users saw the appeal and ubiquity of iPods and iPhones firsthand, potentially years before analysts fully grasped the scale of the growth.
So it's about using your common sense, your own observations, not needing some fancy finance degree.
That's the core message. Trust what you see and experience. And then for a really dramatic example of timing and maybe getting in early, the source mentions the Bitcoin pizza story.
Oh, that story. The guy who paid, what was it, 10,000 Bitcoin for 2 pizzas back in the early days.
That's the one, back in 2010. And today, that 10,000 Bitcoin, well, the value fluctuates wildly, but it's worth an astronomical amount. Hundreds of millions, potentially more at times.
Wow. Just wow.
It's an almost mythical story now, isn't it? But the source uses it to illustrate, in a very extreme way, the potential impact of timing, foresight, and maybe a bit of luck in being early to something truly transformative.
It definitely makes the potential scale feel real, even if it's an outlier case.
Yeah.
And these examples, these stories, they lead into something a bit more reflective in the source material, don't they? About the learning journey itself.
Yes, there's a personal reflection shared that I found quite relatable. It touches on growing up, maybe content, but not particularly focused on wealth building.
Just living life.
Yeah, and then gaining financial literacy much later on. And that leads to the question, what if? What if someone had taught me this stuff years ago? It contrasts things like pursuing passions, maybe like being a summer camp counselor, rewarding work, but not exactly lucrative,
Like valuable life experiences.
with the later realization of how powerful things like compounding and early financial habits could have been if started sooner. It's not saying don't follow passions.
No, not at all.
But it highlights that there can be a financial opportunity cost to delaying that financial education piece.
And that reflection really drives home maybe the most crucial point in the entire source article. Knowledge alone isn't enough.
The knowing-doing gap.
Exactly. Knowledge is passive. It only turns into actual wealth, actual results, when you take action, when you implement what you know.
So reading about automating savings is one thing. Actually going into your bank app and setting up that automatic transfer, that's the action.
That's the action. Learning about low-cost business ideas is interesting.
Sure.
But developing a basic plan, making that first call, setting up a simple web page, that's the action that makes it real. And the article kind of suggests that maybe this moment, hearing this, engaging with these ideas,
It'd be a signal.
yeah, maybe it's the sign for you, the listener, to move from just absorbing information to actually doing something with it.
Yeah.
Even something small.
It's all about creating that initial momentum, isn't it? Getting the ball rolling.
So bringing this all together for you listening right now, this source material makes a really strong case that your financial journey, it starts internally with your mindset.
Absolutely. But the real change, the transformation, happens when you translate that mindset into consistent action.
Whether it's trying those saving tricks we talked about,
Or setting up that lazy investment portfolio.
or maybe even just brainstorming some of those low-cost business ideas.
Whatever it is, building that momentum seems to be the key to actually changing your financial future.
So it might be worth thinking right now,
Yeah.
what specific idea or strategy from our discussion today feels like the most doable first step for you right now?
Yeah, just pick one thing and maybe start today.
And that brings us to a final thought, inspired by that personal reflection in the source. It's really a question for you to mull over.
Okay.
Reflecting on the author's point about learning these financial concepts later in life, How different do you think your own financial story might look today if you had started really understanding and acting on these ideas much, much earlier? Food for thought.